Hello, and thank you for joining us. We welcome you to the World Bank's Agriculture Finance Support Facility webinar. Today's topic is about ensuring KYC compliance in digital finance. Our speaker today is Florentin Lenoir, Marketing and Business Development Director at Lendo. Florentin joins us for part 2 of our 2-part webinar technical program on digital finance. Our facilitator is Roy Parzat, Senior Economist with the World Bank and Manager of the AgriFin program. I'm Tamara Palmer, and I'm assisting you today with today's webinar. For those of you who have not participated in one of our webinars, please allow me to provide a quick tour of the space. You will be on mute. If you need to connect with the facilitator or tech team, please send your questions through the chat box feature found on the right side of the screen. And the last 20 minutes of our time together will be the Q&A session with the presenter. We encourage you to ask questions throughout the webinar, and we will collect and share them as time allows. And finally, this webinar is being recorded. And now I'm just going to give you a quick informal introduction of today's speaker, in case you don't know him and weren't here last time. Florentin Lenoir is the Marketing and Business Development Director with Lendo and has more than 7 years' experience across various industries, business functions, and cultures. His area of expertise includes strategic business development in the cross-cultural environment, international sales and marketing management, marketing analysis, and market research. Florentin is currently the Marketing and Business Development Director for Lendo, supervising the global expansion of the company globally, along with the management of the different offices in Americas, India, and Southeast Asia. Lendo is a software-as-service company helping lending financial institutions globally make more accurate and quicker decisions across the customer lifecycle and drive higher levels of growth and profitability. Lendo transforms the use of data to access and serve new and underserved market segments. Well, thank you very much for allowing me to introduce today's webinar and our speaker. I'm going to turn it over to Roy Parzat now.
Thank you very much, Tamara. Also, I'd like to say thank you to everyone for attending this webinar. Again, I said, and also obviously to Flo for presenting this webinar. The reason we're hosting this is because historically we've done very high-level presentations. We try and do introductory kind of subjects to raise awareness of potentials for expanding ag finance. However, when we had the first presentation delivered a while back on the opportunities to use digital services to reach farmers in a more accessible and affordable manner, we got so much feedback where people were like, but how does it actually work? What do we actually need to do, etc.? And so we talked to the guys at Lendo, and what we realized is it's not enough just to show the potential, but also to get down into the nitty-gritty. So the people in compliance teams, people selling this kind of idea to their boards of directors, trying to persuade them that going the digital route has opportunity, actually have the kind of information in their bags that they can pull out and show that there are some incredible opportunities here. But however, what's always challenged me when I was working in finance many years ago was the idea that it's really expensive to do accurate KYC and identification and verification, and yet it's regulatory mandatory. You actually have to do this in a credible way. There's a whole host of laws you need to meet and requirements you need to kind of, serve. And of course, the big challenge when we're serving especially rural populations is the challenge of how do we actually do this in a robust manner. It's really time consuming. Most people don't have robust identification that can be used. Most countries don't have robust national ID cards. And so when we actually saw what was going on in the digital space, it suddenly struck me that here's an amazing opportunity. Even if you don't move digitally, don't start offering digital loan products, etc., there's still an amazing opportunity to use digital services to actually improve your identification and verification processes. And I think we're very fortunate to have Lendo coming here to talk about what they're doing in this space, because it opens up an incredible opportunity to save money and time, and to actually overcome some of the constraints that are currently limiting your outreach as financiers. So without further ado, I'm happy to pass over to Florentin. And I think we're all going to learn an incredible amount through this. But please, 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 and I say this every time, ask lots of questions. Type them into the box. We'll collate them. Either send them directly to Tamara or send them in the general forum. We know we get a mix of questions that way. and we'll throw them very rapid fire flow at the end of this to try and get his insights. Again, it's a rare opportunity to have someone who's at the cutting edge of the subject coming in and being able to answer your specific questions. So again, without further ado, over to Florentin, and again, thank you for this presentation.
Thank you, Roy. Thank you, Tamara. Thank you, everyone, for joining us today. It's a pleasure to see some of you again after the one we had last week. So, as mentioned, I will start right away and just walk you through the topic of today, which is really around how can we ensure KYC compliance in digital finance when we will be using any kind of technology. Is there any way that we can find solutions that would allow fast tracking of application, that would allow capture of special documentation, and so on and so forth. So I will just walk you through some of the challenges that are existing today when it comes to doing KYC. I'll talk a little bit, of course, of what Lender is offering in terms of online verification. There will be a quick chat on case studies, both front end and back end. So hopefully that will be useful for you to get a grasp of how everything works on both sides of the coins. And I'll share also a little bit of I would say tips to keep in mind as we wrap up this session, and I will of course welcome any question, and hopefully there will be many. So just to kick this off, so so as you know, KYC, or know your customer, is really the process of identifying and verifying the identity of a customer. We know today that it's also used in our industry to refer to the bank and anti-money laundering regulations, which governs those activities. Now, into this world, banks and other financial institutions are more and more required to comply to those KYC. They are also pressured to deliver a more transparent, global, customer-centric, and digital experience to their users, to their customers. And that would really happen through technology. Historically speaking, the customer onboarding process is one of the most costly and time-consuming functions that is preventing banks and other financial institutions to actually scale in a cost-efficient way. The process itself is largely disconnected from other systems, also internally to the institutions. It's not really centralized, and so in other words, there's no seamless view or clear transparency in this process. So there are many challenges today that KYC, regular and traditional KYC processes would face. In most of the cases, you need to actually bring a physical ID, which, as Roy mentioned, in some countries can really be a challenge. You have some countries, such as the Philippines, for example, where there's no government database that can really centralize all IDs. So the process of verifying someone or asking someone to get an ID would be a challenge in itself. Of course, face-to-face requirements can be very subjective. They can be subject to abuse, and it's also a limiting factor. How can you actually be efficient and offer a timely service when you have to actually go through the process of meeting every one of your customers face-to-face? There's a lot of errors that can happen also in a system that is done highly manually. And without, again, very sufficient supporting documents. Now, a lot of those documents, especially, again, done in a process that would be manual, would tend to be misplaced. So eventually, the customer, even if they have KYC'd already once, would have to do it again. And overall, that whole process happens to be really cumbersome, really time-consuming and really unfriendly for the users. Now, just a quick update on Lendo, and sorry for those who actually heard me saying this again already last week. But Lendo really drive predictive analytics in banking using technology. And so part of the solution that we would be providing would really be around identity verification. Just a quick background on Lendo. We started initially in 2011, and we started as an online lending platform. We went through the process of running those 3 platforms in the Philippines, in Mexico, in Colombia for about 4 years, so that we could collect, process, and analyze billions of data points. We could really learn how to use non-traditional data to provide credit scoring and identity verification. And at the end of the 4 years, once the technology was proven to be right, we decided to really switch business model and now to provide our technology to financial institutions that needs it around the world, and mainly in emerging markets, in Latin America, in India, and in Southeast Asia, as well as Africa. So today we power about 2.5 million instant credit decisioning, which would include also the identity verification of the users. So if we look at the types of data that are important to us in the process of this webinar, we would be focusing on social network. We would be focusing on email data, on mobile data, and we would be consuming everything through our platform so that we can then return a verification results to the financial institution that we would be working with. So in this webinar, I will be going more in detail into again, the verification, the identity verification solution. And so the process in itself would really be around being able to capture a lot of information from the end users with their consents, so that we could then probe any information that is provided by the financial institution through the application form that the customers is filling up, so that we could quickly verify and analyze the results and the veracity of the information that were provided. So if we look at the very basic information that we would be able to verify, we would really be looking at quickly verifying first name, last name, date of birth, employer, university, phone number, whether the email address can be verified, the Facebook profile can be verified as well. So there's a way to not only using technology quickly provide results and accurate results on a verification, but also to prevent eventually fraud, all the fraud instances that could happen as well. And this is really around based on the data that we get to collect, knowing that again, with the consent of the users, we get to see in details their data, and we get to really understand whether not only just what was provided in the public profile, but if we take the example of the date of birth, what we would be able to see would really be around, for example, on the Facebook profile, do they have people greeting them happy birthday on that date that they provided? What kind of relationship do they have with these people? Are they close to them? Are they people that are greeting them happy birthday on a regular basis, like every year, ever since they started their Facebook account, and so on and so forth? And that would really allow us to get an understanding or to return a clear idea, an accurate idea of whether or not that information that was provided in the application form, and again, that application form was captured digitally, that's a key element here, whether or not that information provided was true or not. Now, as you can see on the screen, it's not about just verifying the information, but it's also being able to return whether it has not been verified or whether there's a need of doing further investigation on a specific field because we didn't get enough information based on the social data that we captured or the email information that we captured. Now, this being said, this is really a way that enables a lot more applicants to become visible from the financial institution. If we look at traditional information, we would be mainly using IDs that were provided when they are available to verify applicants. And again, as we mentioned earlier, that process can take a bit of time, can be really costly, and really provide a poor customer experience. Now, with using a solution like Lendo or any other technology that would allow you to capture data, to understand the veracity of the information, and to ultimately assist in doing the KYC process, you would then be able to welcome a lot more applicants in the process. Now, I would like to go back to the title of this session, which is really around ensuring KYC compliance. In this specific case, you don't necessarily need to replace the KYC process with an eKYC process that would completely be done online, but at least you get to somehow push the actual verification and the physical verification at the end of the funnel. And so you can really focus on applicants that would be most likely verifying the information that they've provided. So you get to actually, again, fast track, provide a better customer experience, so that ultimately, even if they have to physically present an idea, that can be done towards the end of the process, when if ever they have to go to branches, for example. Now, just to walk you through the user experience that that process could provide. So, assuming that there's a mobile app available, assuming that there's a smartphone available, then the applicant would be invited to fill up an application form, any application form, maybe for a loan, for sometimes a credit card, maybe for any service that the financial institution would be providing. They would then be invited to eventually submit the application and to connect with Facebook. Now, this button here on the screen that you can see would actually be where the technology would be located. So again, everything would be pretty much invisible. The Lendo technology would be invisible from the users. They would only see the environment of the partners of the institution that they're applying for. And in the background, we would be then collecting specific permissions from the users. And once they have agreed on sharing those permissions, that's when the process of collecting information can really happen. This would be the first step, really, to collect social data. Another step could also be to ask the applicant to capture with their smartphone specific documents, specific IDs. We know that more and more emerging middle class and soon enough bottom of the pyramids would actually get access to smartphone and will get the ability to capture directly information from their smartphones. Just a parenthesis also here is that in the case that you operate with agents, the agents could be the one also equipped with a tablet, with a smartphone, and use that element to take pictures of the ID of the users. Could also be the one we could imagine having, taking pictures of their houses if they are agreeing on doing so, so that really the information can be captured and collected on a digital format. So back to the process, we would then be having the ability to capture any kind of documentation. It could be an Aadhaar card if we are in India, it could be a passport, it could be a driver's license in the Philippines, any official ID that the institution would would think is valuable in the process of KYCing their applicants. Now, the pictures are being taken of all the documents, and eventually they are being the applicants would also be asked to why not take a selfie, right? So then you capture also and you start allowing several data points to really allow facial recognition, to allow having different set of documents to compare and to combine. So once that process is being done, all the information collected would be transmitted to the financial institutions. Now, in regards to the applicants, that ends really the user experience. They are now sent back to any page that the institution would like them to go back to. And that can be a thank you page, that can be any app. It doesn't really matter. It's up to you. Now, how does everything work in the background? Now that we have captured the selfie, we have captured the image possibly from Facebook, from any national ID, then the process of cross-checking can really happen. So in this case, based on each ID, each data point that we were able to collect, we'll be able to probe the information that was provided with the information that was collected on a specific ID. And that would then allow, again, specific fields to be verified, not verified, or that would need further investigation. Now, there's a wide range of, again, of ID that can be collected, and this is really based on the financial institutions, on what they would want it to be. The process can be, verified directly, can be completed, directly internally by the financial institution if they want to remain the owner of the verification process, or it could be done and automated through, again, through technology. Part of it being, for example, facial recognition that would allow to cross-check the IDs that were provided, the Facebook picture, again, for example, and the selfie that was taken. Now, just to walk you through some of the experiences that we had. In this case, we're talking about a telco in the Philippines with over 45 million subscribers, but for which 90% of them are actually prepaid subscriber. And so now the idea is to be able to convert prepaid to postpaid. The reason why the number of postpaid customers would be really low is because of all the challenges that they have to actually comply with all the information that they need when the applicant is asking for a postpaid line. And those challenges could be, for example, the lack of credit data on the target demographic, could be the lack of documentation. Again, remember, in the Philippines, there's no national ID that could be easily centralized. The process itself is actually, again, very long. So there would, a lot of drop-off would happen. Customer experience would be, again, very poor. And the struggle would be really real on both sides, for the user and for the service provider. Now, if we look at historical drop-off of this specific customer or financial institution, then we would see that there's a 94% drop-off. So out of 100 people, only 6 would actually manage to complete the process. They're not even given any services yet, they just complete the process. Now, what did we do for that specific case? We started to embed our technology into the tablets that the staff would be using to capture the application. We created a small application form that customers, when they walk in, would complete directly on the tablet. Once the process of connecting the social media account would be completed, then the staff would then be able to make a decision based on the results of the verification that were provided. And the customers would be eventually able to leave the store with their POS deadline within 15 minutes. So this really was an interesting case for us due to several restrictions, I would say, or not limitation, but due to several goals, KPIs from the institution. They really wanted the decision to be implemented right away and the verification to be returned instantly. So in that case, just a few challenges that we had is that the connectivity could actually be very low in some of the stores, preventing to actually offer that kind of good performances. But if you're not time sensitive, if you are actually willing to have a step where we capture the data and a step where we just return the verification, that could also happen regardless of the quality, I would say, of the internet connection. And then we actually had to also clearly focus on specific fields for the applicants to fill out because we wanted to provide a solution that is a good customer experience. And finally, there was a bit of training that had to be done from on the staff perspective, so that they could be fully familiar with the technology that was provided, the solution that was presented, and how to also react to any question from the customers, so on and so forth. And again, in this case, it's the customer going to the store, but it could also be the other way around, the agent going to the customers and capturing their application. Now, how does the verification methodology works here? So in that phase, the process is actually very simple. Once the customers are applying for the postpaid accounts and they've provided their social data, then there's really two options. One is we have verified, in this case, the name, the date of birth, the employer, and then the customers can now be fast-tracked and provided with a better customer experience because they are already approved, and that really happened in a few seconds. If for any reason some of those fields are not being verified, then the customer is invited to provide further documentation to then approve or reject that application. So part of the results that we saw is that in most of the cases we will actually be having results that were very much on par with what the telco was provided using the traditional manual verification process. And that was true for all the different fields that they have selected. This would actually, so this happened 2 years back, but today we would all actually have close to 99% match on all on specific fields, especially date of birth and name. So what is the clear benefit that that the financial institution would have from there? So part of it would really be around the ability to reduce the drop-off, and especially for any walk-in that would have no ID, no national ID with them. So in that case, there's a clear positive aspect in terms of revenue and customer experience. Same thing for the real-time decisioning. For that same financial institution, it would take them, on average, about 11 days to verify basic information from the users. And this is really because they have to pick up the phone, they have to try to call the applicants, they're not really sure of when is the best time to actually do that process. They actually need people to phone all day long, which is of course very costly, and again, the customer experience here would be really poor. So by managing to reduce the drop-off, they can really approve more people They get also to get rid of all systems, all processes that they would have, and that technology would offer to replace, basically, because they now do not need to do manual verification on some of the applicants that were able to be verified directly through the digital verification. And finally, we reduced the instances of what we call false negative, so instances where there was doubt that the information that was returned was not accurate. So this is really for the use case in regards to, I would say, the front end, so more on the user experience. Now, if we look at the back end, and if we look at some key figures of how fast everything could happen. So in that example here, we would focus on a customer that is still in the Philippines. So it's a different customer from the first one, and they tend to have. So last year they had about 50,000 applications every month. In Q1 2017, they started to have an increase in the number of applications that they were processing with us. So it jumped from 50 to 80,000. And what we realized, so there's two things that we realized. So if we break this down into the number of applications that would pass through our system per hour, we could see that on average we have 250 to 500 applications per hour from 11 a.m. to 9 p.m. And they were using mainly Facebook verification. Now, for them specifically, it was really crucial to be able to return the application within 1 minute. And once we started looking at the numbers, when we saw that they had a peak and increase in terms of number of applications, what we realized that the average processing time was 35 seconds. So good, that was within what we wanted to have, but you still have 15 to 20% of the application that was above 1 minute to be processed. And this was really happening because you have to see, all those servers, those cloud-based solutions would process everything through a pipeline. And if you start having a lot more applications that you have initially scheduled, then you tend to have a moment where it kind of blocks, it becomes slow, and those applications will not be processed at the same time. So we started looking at the real application processing flow here. So the way it works is really the application is being created, social media network would be connected. So they will connect 1 or 2 or 3. And so as soon as they connected those networks, we can start fetching the data. So we start fetching data from the network that they've connected until they've completed the process and submitted that application. In the background, once we're done with the fetching of all networks, we would then be able to start the verification process until the verification process is completed. Now, if we look at some key rules to keep in mind here, we could, I just want to mention that, and this is really more for your information, but the fetching starts really only once the social network, the social network has been connected. So all different social networks would be completely independent from each other. And as you can see, it's asynchronous. Now, the verification process, which is the next step, would really only start once the conditions below are actually mentioned and met. So the application was submitted, so the end users completed the whole process and the whole user experience. And the fetching process of all the social networks have also been completed. Now, this said, how could we allow our customer here to be happy? And the process here is just being able to identify the specific pipeline for that customer, and to be able to allow better processing of all the applications that were submitted. So we started doing a bit of work on the servers, making sure that everything was processed in an efficient way, and we saw that the average processing time was actually reduced to 24 seconds. So that was a bit improving, a bit of improvement compared to what we had earlier, but still we had 10% applications above 1 minute. Now, we kept doing a bit of tuning on the system that we have, and then we really managed to, again, improve further those results. So in that case, it's only 12 seconds on average, but you still have a bit of an application that would be above 1 minute. And what we would actually really be looking at is to be able to deliver the best customer experience possible for this partner. We should really be providing the results within 1 or 2 seconds. So in that case, we kept doing some tuning. We tried to prioritize some fetching activities, and we then saw the results that we really wanted. And that really was to have, so as you can see on the screen on the graph, in blue the time to verify, and in red the percentage of application above 1 minute. So what you would see here is that you would have a clear improvement in the quality of the service that was provided to that customer due to some adjustment in the pipeline that we have, and that really gives an idea of how technology can really align with the expectation of what the financial institution or the banks would have for as long as we are in a digital space, of course. So before we wrap up this call, I kind of wanted to mention also an example of an eKYC process that has been implemented in India, which is the Aadhaar example. So the Aadhaar authentication is actually a process by which an Aadhaar number along with an Aadhaar card holder or would be and all those their personal information, such as biometric or demographic information, would be collected and submitted to what we call the UIDAI, what is called the UIDAI, which is a unique identification authority of India, and then that authority would actually return a response that would only be yes or no. So the purpose of that authentication is to really enable the applicants to provide their identity and for the service providers to actually supply their services and give access to the services in a very efficient way, in a really time efficient and cost efficient way. Now, this system is actually, so this eKYC system would actually be available in different sectors and industry in India from banks, insurance, companies, government organizations, passport offices, and so on and so forth. So this has clear benefits that are easily measurable. Is that at first it really promotes a paperless environment. There's clearly less risk of false document. That Aadhaar is really a government initiative, and all information is really being centralized. It is clearly also compliant to the latest rules and regulations that government of India has been promoting and deciding on. It offers a real-time and instantaneous results, and again, it removes paper verification, storage, transfer from one to another. It allows, again, harmonization of the system, and so that that element here is a very interesting example um, of how government, how regulators could clearly have an impact on how fast that eKYC process, how fast this onboarding through technology could actually be achieved. And so just to wrap up this and to conclude on this, few things I guess to keep in mind is that it's really everybody's duty to actually educate the end users, to be able to teach them how to use technology, how to understand technology, and that could be on different level, not only on the information that they possess, so the passport, the ID card, the token, which is really the information that they have available online, but also on on the ID that they know of. So those are password, PIN code, TAN code, and so on and so forth, and based on their own existence, so fingerprint, facial recognition, voice recognition, eye recognition, and so on and so forth. So these would those different level of those different components would actually have different implications in terms of regulation. And so a key element that we believe in and that we think of is that it's really important to have every actor part of that discussion on when it comes to regulation, and that really come from of course the regulators, the government, but also the financial institutions, the technology provider, and the users. And so we know that in some of the cases that process of using technology may not really be available just yet, because people may not have Facebook, they may not have email, they may not have all the information that are being required. But slowly we know that it will be the future of finance, and that it will happen more and more, and they will find and there will be new ways to actually onboard customers. And again, it's not necessarily just the customers that are completing the information from their own devices, but it could actually be the agent, the devices that goes to them. And finally, of course, don't forget the users. And an example that I would like to mention here before I wrap up is really around if we take the example of Facebook. Facebook is currently deciding what information the users can share. And the reality is, as a user, why can't they decide what information to share if that will allow them to get access to better services, to faster services, cheaper services? So again, a few perspectives here to keep in mind and to be reminded of, and that would actually wrap up this presentation, which I hope you were able to enjoy. I will now leave the floor to Roy and to any questions that came out through the process here.
Well, firstly, thank you so much. I know that my knowledge has totally risen in terms of the opportunities. For me, I'd always been considering this from a kind of either-or approach, but one thing that came through from some of your case studies specifically were the opportunities to enhance existing processes and to actually improve the client experience. Again, it's so easy from a kind of financial perspective to always think about it as what do we need to do to meet our regulatory obligations, rather than what do we need to do to not only meet our regulatory obligations but improve our business performance and enhance our customer experience. And that really jumped off the page when I was listening to you. So thank you very much indeed. So we have had a number of questions, and I've got a whole list of questions I want to ask that we also have got for us. But I want to jump in with some of the questions that were asked to the wider group from some of the attendees. One specific one that came up, which I thought was super interesting, is do you have any data on the cost savings to an institution taking this on board? Especially, obviously with regards to primarily this has been done in an urban context, but also anything you know about rural and ag environments in terms of cost savings for the KYC part.
Sure. Thanks for that question. So, um, it's hard to draft an average because every country would have different regulation here. But if we focus on some of the examples that we saw, we would actually see that if we take one specific field, if we take the employer's verification, for instance, what we saw is that in the Philippines, that from what we heard from some of the partners, that would cost, if I convert it correctly, that's about $10 or $15 just to be able to verify the employer, because of the time you spend trying to contact the employer, because of the the staff that you need to actually do the calls, because of even the fraud attempt that you have, because sometimes you actually get in touch with the employer, you get to do it quickly, but then it's all a scam. So even that would be included in that costing, and so they can clearly reduce that by close to like easily 50 or 60%, just focusing on using technology. Now that is in an urban area, as you mentioned earlier. Now, if we look at a rural areas, it's harder to quantify, but again, in the process, and this is something we saw in the market, is that in the process of having actual agents going on premise, check with the customers their idea, take pictures of some of the key elements that are around their houses or in their houses, or even check just the location of where their houses is. Then they get to save quite a lot. I would not be able to fully quantify it, but or at least I haven't been able to fully quantify it. But again, on this case, it's not only in terms of economics, but it's also in terms of user experience. It's also in terms of efficiency of your processes and reduction of attempt to fraud that you get benefit of.
Perfect. Thank you very much. That's actually a really good answer, because that leads on to another question we've just received, which is super interesting as well, which is, have you got any kind of implicit or even kind of explicit kind of information on where you actually add social media verification into a KYC client take-on process, on any kind of impact it makes on credit performance? Do we see a reduction in credit default rates where you've actually added on that extra value add of the social media verification part? Or is that something we haven't considered to date?
No, so we would have customers, we would have partners that would be using just the social verification, just the identity verification services that we have, and by simply using that service, they would see an improvement in terms of their overall performance, portfolio performance, and that could come in terms of the approval rate that is increasing, and that could come also in terms of reduction in fraud, and overall then a reduction into the default rate. Now it's not as significant as using a credit scoring model, but it does have an impact, and something that I just want to mention here also is that those two elements, the credit scoring on one end and social verification, would actually be very independent from each other.
Okay, that is super helpful. Now, one question that came up repeatedly has been people asking the difference between feature and smartphones. Obviously, a lot of your case studies looked at environments where smartphone penetration is the norm, and we're thinking again primarily in urban areas, I imagine. But questions that have come in are, a lot of our rural clients are using feature phones. Is there a mechanism of doing this with feature phones, or is this a prerequisite for clients to have a smartphone? Obviously, I'm assuming that people who have smartphones are more likely to have Facebook accounts, so that must have a role too. Or is there a mechanism where you can actually do this and improve this with feature phones, or is it a mandatory element to have a smartphone?
So but that's a very valid question, and I fully understand that the, the the further you go in rural area, the less chances you have to actually get someone that is using a smartphone. Now, as of today, I'm not aware of any technology that would allow the use of a featured phone to verify the identity in a very efficient way. Uh, this this being said, I would actually go back to the role of agent, and that really depends on how everything would be structured in the organization. But there is a way to, again, if we go back to the capture of the actual document, the physical document, there is a way to actually do that through agents that were provided with tablets or with smartphone, rather than having the applicant himself doing it through a smartphone that they would not have. And that brings me back to also a point that I wanted to mention. This is really around it. Again, it will, we know that it will take time. We know that smartphone penetration is going to increase in the next few years. But for what it's worth today, being able to capture information from the agent through their smartphone, through their tablet, would already initiate and educate the market to get familiar with the digital space, and eventually, hopefully, they get to or we get to find solutions that would actually apply to people that have a featured phone.
I find this super interesting because prior to your presentation, I'd always been thinking along the lines that this would be an individual interacting directly with a financial institution and doing it over digital technology. But then when you bring in the idea of agents being the possessor of the technology and being able to actually act as that link, it also changes the kind of educational hurdle too. So that is super interesting. I'm sure there's a number of people on the webinar thinking, so we can link this to our agency model, to our SACO model, and it involves having one person as an aggregator with a smartphone or with a device being able to utilize that for a collection of rural ag clients. Is that where we're coming from here?
Correct. No, absolutely. I think there's also a need to change probably the paradigm that we also operate under, with all traditional ways of doing things that could be that could be kind of like rethought of using technology, which is meant to actually change, internal processes that institutions would have because of the opportunities that they create.
Perfect. Now, it's going to sound weird, this, because I'm going to be jumping all over the map with questions. That's because they're coming in real time, so this is a positive thing, not a negative. But there's a good question that came in regarding Facebook and verification. And it's a question, I think, that gets to a hub of many people's concerns, which is it possible that people might game the system? And specifically, the question was, if customers know that Facebook is a key tool in the verification process, how are you as Lendo addressing this to make sure that people aren't gaming the system and committing frauds by creating fake profiles?
That's another good question. I think what's interesting to mention here is that it is indeed very easy today to create a Facebook profile. All you need is actually an email address. Doesn't even have to be a real email address that you're using. You just need one. You actually just need a phone number. Now, I would go back to the fact of to the data that we capture, and we would be paying attention to, for example, the age of the account. So if you create an account just for the sake of applying or to actually fake the system, it will appear as the fact that you just created that account for that purpose. It would also appear in the activity that you have with that account. It's easy to create one account. Really hard to create interaction between hundreds of accounts. If today we look at the number of friends that people would have on average, we could be around 100 and sometimes even more, 300, 400, but that means that they have interaction between those people. And I go back to the fact that for the date of birth, if people are greeting happy birthday in a regular basis on a specific day that was mentioned, and if they have regular interaction in, between among each others, then you start to really understand that this is a real Facebook profile. And this is what we saw in the data that we've collected, in the Facebook profile that we tested, and so on and so forth. And so again, back to the point, yes, it is very easy to create an account and to fake, but if you try to apply with an account that you just created or that you're not actively using, and for which you don't really have actual interaction with the people in the network, then it will appear and it will be perceived as an attempt at fraud, if that answers the question.
Roy, have we lost your audio? I think we've lost Roy's audio. That's all right. Thank you. I'll just step in here for a moment, everyone. This is Tamara. Yes, that does answer the question very much. Thank you for that. Now, to follow on, we had another question. Again, we're jumping a little bit away from the Facebook and the verification questions, but Oliver would like to know if, assuming an MFI would collect location data, so for example, with a GPS app on a smartphone when visiting customers, could your system present it visually in the form of, say, a map? And is identity contradiction an issue in that way? Can two people claim the same location? How does Lendo's app handle that situation?
Right. So there is indeed a value in being able to capture the GPS location of the users. I would actually go not necessarily into the use case of having two people, sitting in the same location and so on and so forth, but part of the usage that you have of the GPS, and this is done by Lendo, but not necessarily, not only, I mean, you would have other institution or the technology provider that would be doing it, but it's also capturing an understanding of what an applicant is actually doing. Where do they spend most of their time? Do they have regular itinerary that they follow, routine itinerary that they follow on a daily basis? And what is that telling about them? That could actually be telling them if they have a job, if they are a student and they are at school, if where is their home addresses, for example, and so on and so forth. I've known of also another company that is using all the different addresses, past addresses that an applicant would have, and they would be checking on Google Maps, they would be checking even physically, how does those specific houses look like? And they would define if there's, an improvement in a social status or sort of a regression, and they would actually use that information. Now, whether it's moral, immoral, or something, it's a different topic. But those are kind of like the options that technology is offering today.
Very good. That makes sense. And then along those lines, the idea of using this platform as a way to help financial institutions increase the process that they're lending and reach more clients, but what are they needing to do to educate their regulators in their home country? Do you have any thoughts that you could share with our audience on that?
So based on what we are seeing is being able to create dialogue between regulators, technology providers, financial institutions, get everybody around the table is actually a key element here. And we actually see a lot of initiatives that are run by SIGA, by World Bank, that would actually support those interactions and create the framework that is needed to engage with a pilot, for example, where they would be able to test a specific technology on a specific population for a specific period of time. And I think testing is a key element with technology and is highly needed to really be able to assess if we're going into the right direction. And again, it may happen that it will be a failure, there will be mistakes along the way, but the process of testing and of learning is a key, again, is a key dimension to keep in mind when we want to move things forward, especially with regulators.
Absolutely, absolutely, that's correct. Well, great. Well, thank you very much. It's now 11 o'clock, and I believe we've answered most of the questions for today, and we will follow up on our LinkedIn groups answering any remaining questions that we've missed for our audience so that we can help hone their understanding. But we really want to thank you, Flo, for taking the time to share these very technical and interesting aspects of KYC compliance. So it's just been a wonderful opportunity to get to know more of how the system works, granted specifically from the Lendo perspective, but I know that this is applicable to many different types of digital finance. So thank you so much.
No, thank you. Thank you, everyone, for following us, and looking forward to receiving more questions if you have any.
Great, thank you. Well, that concludes our webinar presentation today, and we will make the webinar recording and materials available on the Agrifin website within 24 hours. Well, as always, it's agrifinfacility.org. And please stay tuned. The Agrifin website is going to be sharing information about some upcoming webinars that we will be announcing new topics in the very near future. So thanks again. You're welcome to join us on our LinkedIn group, Agriculture Finance. And we hope to see you again here soon. Thank you, everyone, and have a wonderful rest of your day.